gotta get them going, man. Gotta get them going. You ever wake up one of those days, you're like, ooh, I want it today. Today, I woke up like that. Today's one of those days I'm like, ooh, let's get into this, baby. Woo, 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 woo.
Welcome back to Strongman Personal Finance. We got a sponsored video today. That's right. Somebody compensated me to look at the financial statements of Nikola. And if you want a sponsored video, see the pinned comment below at the conclusion of this live stream, and I'll make a video about whatever you want me to talk about. I don't do valuations. I don't do stock price predictions. So I just finished a tax return, and now we're going to do this sponsored video going over the most recent financial report of Nikola. Now, if you've never heard of this company, I believe this is the company that they had like a truck. And I was paranoid I'm not sharing my screen. They had a truck and they pushed it down a hill. This is how smart they were. They pushed it down a hill and they filmed the truck going down the hill. Not from its own power, but from being pushed. Okay? That's called fraud. That's a misrepresentation. That's a fallacy. That's fake. And guess what? They got caught. They got trouble. And the stock price collapsed. I mean, look at what happened to the stock in 2020. Okay? Clown stock back in the day. The question is, in this sponsored video, is this a clown stock now? Now, the first thing I want to point out to you is this thing is almost a penny stock. Okay? I believe that if you're, don't quote me if I'm wrong, if it goes below $5, it's actually a penny stock, okay? I wonder if Nikola's in trouble for listing. We'll see. But it's a $5.64 stock. Now, if you have a low IQ brain, you probably think that means it's cheap because it's $5.64. That's cheaper than Berkshire Hathaway because it's a lower price. No, okay? You got to look at the total value of the company, which is $285 million. The total value of Nikola Myshtikala is $285 million on revenue of $48 million. This thing actually has revenue. Wow. That's better than some other companies I've looked at. And net income of not bad, negative $860 million. That's all they lost in the last 4 months or 4 quarters. That's not a big deal. And earnings per share of negative 22. So for a $5.64 share, they had earnings per share of negative 22.13. That seems like a company I want to invest in. Okay. The beta is 2. It's more volatile in the market. Analysts say hold. Who? And the price target is $35. Now, let's go look at some of the historical revenues of Nikola. So apparently the most recent quarter, which we're going to go look at in more detail, they had a nice little spike in revenue. But you can actually see there was one quarter, it looks like the third quarter of 2023, they had negative revenue. Okay. But I guess the revenue is trending up. Okay. That's a good thing. Operating income. This is their profit before interest and taxes and one-off things. Is, at least of the most recent quarter, negative $131 million. They have never returned an operating profit, at least in the last 5 years. I don't know what happened to the fourth quarter of 2022, but it's not showing here. All right, let's look at margins. What are the margins? So gross margin, negative 174 million, or negative 174%. Okay. Seems it's not bad. Operating margin. This is the operating profit or loss divided by the revenue for negative 418%. Okay. I mean, we're getting there. Profit margin, negative 426%, and free cash flow margin of 473%. Okay. Not bad. Are they cash flow positive? Because sometimes a company will have negative free cash flow because they spent more in like capital expenditures than they did in their operating cash flow. So negative or low free cash flow isn't always a bad thing. As long as the company's like making operating cash flow and is employing their operating cash flow properly and is using financing properly, then it's fine. Okay. The problem is when you have a negative operating cash flow business, they're not making money from their core operations. What do we see here? Only a cash burn of $134 million in 3 months. Okay. Is there a woman running this company? I'm just kidding. Let's see. I don't see any capital expenditures. And I do see them packing on a ton of debt and issuing shares. A company that isn't making money. Imagine if you weren't making money. If you made $2,000 a month and you spent $3,000 a month and you had a couple thousand in savings, you're going to blow through that in a couple months. Well, how would you get money? Well, you would borrow it, right? Or try to make more money. But you'd probably, if you're a corporate like this thing, they'd borrow money or they'd issue shares. They're surviving off of issuing debt, which increases future interest expense, which decreases future profits. It could bankrupt the company if they can't pay it. And they're issuing shares, which reduces your future percentage of all the company's future cash flows, which in any case are negative. Okay. That's dilution. And it's basically a reduction of your future profits because of interest expense, because they're burning cash. Okay. We doing good. All right. So let me close fart box there. Imagine if I showed somebody stuff. All right. Nikola Corporation. This is their condensed consolidated financial statements. Okay. The first bullet. We are an early stage company with a history of losses. Expect to incur significant expenses and continuing losses for the foreseeable future. Yeah, I can tell. And there is substantial doubt that we will have sufficient funds to satisfy our obligations through the next 12 months from the date of this report. What do you think that means, ladies and gentlemen? Or gentlemen, because women don't watch my channel, except for like one or two. I saw there's like one or two. God bless y'all. What does that mean? That means they're saying they don't think they have enough money to pay their freaking bills. What does that mean? Bankrupt. Okay? They're telling you in the first freaking bullet. We need to raise additional capital. Yeah, you definitely will. Okay. Our future success is dependent upon the trucking market's willingness to adopt hydrogen electric trucks and battery electric. What happened to Fart Huffer Hyliion? Okay. I don't know what their breakout is between hydrogen and battery electric, but Hyliion was a total disaster. They basically dumped their truck and they went all in on this stupid freaking soggy bird turd generator. Like, this isn't good. Okay. Okay. Let's see. Oh God, it gets even worse. We identified a material weakness in our internal control over financial reporting. That's bad. And have identified other material weaknesses in the past. If we are unable to remediate these material weaknesses, or if we have additional material weaknesses, yeah, you think good accountants are staying at this company? Dude, I'd be out of here in a heartbeat. Oh, we'll give you stock options, Chris. Oh, really? Nikola stock options? Oh, sign me up. Psych, I'm out of here, you freaking losers. Or other deficiencies in the future, or otherwise fail to maintain an effective system, blah, blah, blah. Blah, blah, blah. What does that mean? Their accountants, like, they're fight. You can't even trust their numbers. Because their accountants they lack the controls to make sure stuff doesn't get jacked up when it gets presented to financial reports. Okay? Basically, their numbers are not necessarily trustworthy. I'll just leave that at that. That's not good. So they're saying they're going to go probably bankrupt in the next 12 months. And they're saying the numbers are bad. This is like Tattooed Chef. It's probably worse than Tattooed. Tattooed Chef had better margins than this. Okay. Okay. Oh God. All right. So, how are we doing? Let me check on my audience. Okay. All right. I always want to make sure that my voice is going. I would hate to do a whole freaking video and then nobody heard me. So, as of June 30th, 2024, and oh, by the way, it's September 5th. They had cash of $256 million, which sounds like a lot, right? But remember, they burned like what, $130 million in cash in 3 months. Their cash might be gone. Oh boy, this ain't good. Okay. And accounts receivable of 39. I'm surprised they even have any accounts receivable. They're finally generating sales. They're increasing their sales. Good for them. And they got inventory basically flat at 62 million. So their total like liquid capital is roughly, this is money that they're either have on hand or will get pretty soon to pay their debts is roughly $300 million. Okay. What do they owe in the next 12 months? $281 million. So they're right on the cusp. Okay. They're right on the cusp. But I suspect that this cash is burning faster than they say. Okay. And when you look at this inventory here, right, you're like, oh, it's a current asset. You know, it's going to generate a bunch of cash when they sell their products. No, because they sell their products at a massive loss. Like, I'm surprised they're probably doing massive inventory right now. Who freaking knows? But it looks like they're barely going to potentially squeak by for the next year. Okay. Barely. Maybe. Probably not. Because, you know, companies, they have a lot of cash. Like, this is a lot of cash. Is there market cap? It's probably what this. Okay, here's what some doofus is probably saying. They have enough current cash on their balance sheet. You're basically getting the company for free because the market capitalization equals the cash. Well, I guess that's almost true, but they also have debts and they're burning the cash. So if you buy a company at cash value, they're still burning cash. Like, you're not making money. Whatever. All right. So they're on the surface, the current ratio doesn't look that bad. But when you look at the cash burn, it's a little concerning. Okay. Because when they reconcile on their statement of cash flows, they do it for profit and loss and then changes in balance sheet items. All right. Let's look at their assets, long-term assets. So they have $500 million of property, plant. They are a very asset-heavy business. Obviously, they're making trucks that they roll down hills. Okay, $500 million of PP&E went slightly down because of depreciation, probably. Investment in affiliate. Who are these clowns invested in? I want to know. Tiny goodwill back. So they roughly have 600 and something million, maybe 700 million of long-term assets. And their long-term debts, they're actually not that bad relative to long-term assets. Okay. But the problem with this company isn't like they're not massively underwater with long-term debts. What they are is they have a liquidity problem. They're going to have one very, very soon because they're burning cash hand over fist. How much have the shares gone up? Okay, so in the course of 6 months, and remember, we're already 3 months almost from this report. How many freaking shares have they issued? 48.47 divided by 44.34. They've diluted by 10%, 9%. They've issued 9% more shares in the course of 6 months. Okay, so your future earnings for your 1 share or your 5 shares that you own is your future earnings are diluted, even though this company won't have earnings. Okay. And they have total stockholders equity of $523 million. Now note their stockholders equity dropped by roughly 25%, 33%, 30% probably in the course of 6 months. Oh boy. Yeah, actually, let's see how much the equity dropped by. It was 19,523. So they burned 196. Their equity, their assets in excess of their liabilities went down by 196 in 6 months. So if we divide that by the current 523, 196, they will be completely wiped out in a year and a half. All their assets will be consumed, or their equity will be zero. If the current rate continues, their equity will be zero in a year and a half. Oh boy, a year and some change. All right, let's look at revenues. So revenues are up. Okay, they're selling trucks basically. They more than doubled their truck sales, but their services declined. But the trucks made up for it. So their truck sales have more than doubled. That's good. Look at the cost of their truck sales. So they sold the trucks for a cumulative $28 million, but the cost of the trucks, this is the labor, materials, and allocated overhead, is $78 million. Now, like I said, the reason these gross losses are so bad is because a new company that isn't using most of their capacity, the costs of the factory are spread out amongst fewer cars. So what you get is you get the cost of each truck. The cost of each truck is higher because they're not at full capacity. So you'll see these new companies with massive gross losses. It's because of that. In accounting, the cost of the factory is allocated to the inventory, and then that expense is recognized when the truck is sold. So that's why you see these huge losses. These are like the built-up costs of the factory. Depreciation, this, that, whatever. Okay. Managers, whatever. All the freaking overhead. So obviously their gross loss is horrendous. R&D. Wow. They only spent $40 million on R&D, but hey, they cut R&D by 33%. And they cut selling and admin. So they basically cut their operating expenses in half almost. They're probably firing people left and right. And loss on supplier deposits. What the heck is this? Okay. One of their suppliers go bust? Whatever. Okay, so they cut their selling expenses almost in half, or their operating expenses almost in half, because they're trying to save money desperately, because they realize they're going to go bankrupt potentially within a year. Interest expense is down. That's interesting. Loss on extinguishment of debt. I guess they're trying to pay off debt. How much debt do they pay off? Not much. Wow. Okay, they paid off like $3 million of net debt. Good job. Okay, so they massive losses. I mean, think about it. Like, you're losing $2.86 per share on a share that's worth $5 and something. And year over year, they've doubled the number of shares outstanding. Doubled it. Crazy. Amounts have been adjusted to reflect a 1-for-30 reverse stock split that became effective on June 24th. Of course. So I get after the stock split, they're still at $5. This thing is a disaster, man. God. This thing is finished. Okay, I'm gonna call it. This thing's going bust unless Saudi Arabia comes in and gives them like $100 million. And even that won't last. $1 billion. Okay, this thing's going bust. This thing is done, son. Done. Watch it 20x. But it went up strong, man. So in the course of 6 months, like we said, they burned $250 million in operations. In 6 months. So they're burning, just in operations, $41 million a month. That's going to last a while. How much cash do they have on their balance sheet? Oh, $256 million, and then 39 of receivables, and then inventory, which they're going to sell at a massive loss. Yeah, that's gonna last. All right, so they burned $250 million in the course of 6 months. Okay. But they only spent $30 million on property, plant, and equipment. They really slowed that down. Oh, they sold some assets. They're desperate. They're selling their assets. Oh my God. They generated 50. So they did an equity issuance. They issued shares within the last 6 months, and they only generated $52 million. That covers 1 month of operating cash burn and some change. And that was their last share issuance. So, if they issue shares again, the stock price is going to collapse. Like, they're in the death spiral. This thing is done. Done. Okay? Oh, my God. Oh, my God. An inventory write-down. Okay, they were writing down inventory. How much did they write down for inventory? Inventory write-downs. Only $37 million of inventory write-downs in the last 6 months. Which means their inventory is worthless. Oh, this is so bad. Let's see. Okay, stock split. Okay. Funding. Okay, whenever you see going concern, you got a problem. Going concern basically means the company's probably going to go bankrupt. Just whatever. If you pull up a clown stock, Control F, type in going concern. This right here. Type this in. Where is it at? We lost it. All right, let's test this. Going concern. Here we go. Type this in. Oh, whoop. Let's find it again. Type this in. And if you see this pop up, I would potentially stay away. Okay. God, what a disaster. I can't do stock buy recommendations, but I give you a freaking stock not buy recommendation. This thing is a piece of freaking trash. Disgusted. I'm absolutely disgusted by what I'm looking at here. Oh, short-term liquidity requirements. As of June 30th, our current assets were $430 million, mostly a lot of cash, but also worthless inventory. Inventory of $62 million. It ain't worth that much. Let's see. Accrued expenses includes $81 million related to an SEC settlement. What? Is this for the fraud? They're so done. And $47 million for warranty reserves. They're expecting $47 million of like future repairs. Oh my God. Oh. Okay, for at least the next 12 months, we expect our primary demand for funds will be on the ongoing activities described above. Our short-term liquidity will be utilized to fund the current portion of non-cancelable commitments, including leases, debt obligations, and purchase agreements. During the second quarter, we ended various commitments primarily related to lease agreements for facilities and hydrogen fueling, which have not commenced. Look, this thing is done, okay? Done. Write it down, okay? So I proclaim this to be a clown stock. Nikola is a piece of trash that is going to go bust. Probably a little bit more than a year from now, maybe sooner. This thing is done unless some miracle swoops from the sky and saves them, okay? What a disaster. All right, guys, a reminder, we'll do comments. This is a sponsored video. If you want a sponsored video, check out the pinned comment at the conclusion of this video. $50, and I will do any video you want. Well, I have the right to not do the video, and I'll refund you, or you can choose a different one. But check out the pinned comment below. Check out my book, Stop Being a Broke Loser. It's on Amazon. It's an amazing book. It's like, what, $13? And then if you want a one-on-one tutoring session with me, a certified public accountant, that's right, $75 to the pinned comment below. Careful. Missed you lately, strong man. I've been busy with stuff that pays more than YouTube. I'll just put that out there, okay? But I'm almost done with it. Strong man. Nikola's permanently parked to the truck. This is like every single possible thing of clown stock is this stock. Oh, it's bad. I fell for the rolling down slight grade scam and lost money. Same category. And then you know what's going to happen? Here's what's going to happen. Tomorrow, the stock's going to vertical line for some stupid reason. You know, maybe the shorts covering. And all the clowns in the comment, I see! I called this, bro! You're so stupid! Nikola's the best! I made so much money! Yeah, okay. And the joint venture with GM. Yep, garbage. This thing is going bankrupt. No doubt in my mind. Strawman, what's up, bro? Long time. I'm not bullish, but I've seen LA again, not bullish. This thing's done, dude. You seem to be after EV. I've always been after EV companies. This thing is bad, okay? I don't care what company, what they do. This is not good. Loaded with debt and Nikola. This thing is done, dude. Look at those traps. That's right, man. I've been so fit recently. I actually lifted today. Fucking jacked! That's right. The average retail investor is 81 IQ. I mean, dude, I'm looking at Kamer's channel and I'm just like, I can't handle this anymore. Like, it's so stupid. Thank God I have other ways to make money than this degenerate garbage. Oh, he's doing better than ever. You know, he's a genius now. Why are you using StreamTards? Use OBS instead. I'm used to StreamYard. It's easy. It's free. The only thing that will save this company is federal funds. No, this thing's done. Done. It's not even it. It's just done. They're burning so much money because they can't generate the volume of sales to compensate for all the expenses of research and selling. It's a sales problem. They're not selling enough. Did you literally lose? Yeah, Strongman isn't wearing a shirt. Newsflash. Shocker. Yeah, this thing belongs in my toilet after I wipe my you-know-what. What is this title? It's called YouTube. This title is inappropriate. Which title? What the hell? This thing is bad. Here today, it's down. No, I mean, it doesn't even matter what it's down. If you look at the numbers, this thing is an abomination. This is like Khmer if he was a stock. Yeah, Juggernaut into the ground. I'm sure that management is proud to get the stock and patting them. Yeah, and they were in the pennies until they did a reverse split. What was it, 30 for 1? It's fun, yeah. You know how many, like, I called so many clown stocks, and I just got so much hate. So much hate. And guess what? I was right. Doesn't take a stock guru to figure. Some people will buy this stock because, oh, it's got hydrogen. You think Dollar General? I don't know. Maybe I'll cover it. You've gone downhill ever since you made that video defending Kamala and attacking capitalists. You know what's really hurt me, Gil, is I've just been busy. I've been posting a lot. And the videos that I do post are like sponsored videos. And I mean, those never do well. So it's like, whatever. But hey, I'm getting compensated for them. And you can compensate me too with a sponsored video. Pin comment. Give me money. Thank you. Dollar General should implode. They can't sell anything. That story. I mean, who goes there? Seriously. Did the Russians pay you as... It's definitely the Chinese, dude. Dollar General stock rip. Plus in there, they're robbing still. K is an Ike. He's definitely in the double digits. I lift my wallet, did 30 reps today. Wrong. Unrelated, what are your thoughts on Tom Nash? I don't know. Maybe a sponsored video would entice me to make a reaction to Tom Nash. I've talked about him before, but I got to end this video. Dumpster fire. All right. Well, thank you, everybody, for your comments. Thanks for watching the video. Check out the pinned comment. Give me your money. And once I'm done with these last few things that I have to do that pay me way more than YouTube, then I'll be back. Cheers!
Since this time last year, I am down not 1 million, not 2 million, but $3 million. And, you know, I'm down over $1 million in the chef. Over $1 million if you add up all my different accounts. As you're seeing there, you know, basically lost everything in the stock.